The S&P 500 moved up on Monday but failed. However, this was not a surprise because we knew that S&P 500 will fail and will continue to fail for 2 or 3 days. Because this failure was happening in the S&P 500 through the trend line. And other than that, at the same time, the same failure was happening in the Dow Jones through the trend line as well as the overbought condition and absolute saturation. This is why we knew that the S&P 500, Dow Jones and the entire US stock market will fail in the first half of the week. And all of this I have already discussed in detail in my previous S&P 500 weekly technical analysis. But in terms of the numbers, you can clearly see that this was mentioned in my daily updates from Monday onwards. This zone was the trend line zone in the S&P 500 and this number was the trend line number in the Dow Jones, and both were supposed to fail at the same time. And both indices were designed to fail. However, the same trend line or the same trend line zones are now indicating a trend line breakout and a probable all-time high level in the S&P 500. And there is good room in the bull side in the Dow Jones because now the Dow Jones has come down and the technicals are now out of the overbought condition. However, still there is some room that the Dow Jones can help the S&P 500 to move up and to build a new all-time high level. Now, if I am saying that the S&P 500 may create an all-time high level in the coming week and also there is very heavy possibility of a real trend line breakout, then why I have mentioned the 7,200 range? For that, you need to understand the movement on Wednesday, 8th of July when there was a flat open, but the S&P 500 and the entire US stock market came down heavily and sharply, and then intraday there was the recovery. The low on that day was 7421.82 or approx 7422. And if you notice in this, the midday update on the same day, Wednesday, I mentioned that the 7,400 will remain open, but the S&P 500 will fall and will stuck around 742x level. However, because of heavy intraday bullish movement in the chip stocks like Nvidia, Broadcom, Micron, etc., there was very heavy bullishness in the S&P 500 on 8th of July. And in this update, I mentioned that no matter what, the S&P 500 will stuck at or within the trend line zone in the 754x. And the same pattern was repeated on Friday. And again, the chip stocks came into the picture. And other than the chip stocks, it was actually the 754x zone created by the trend line and my level. And because all of the first 3 hourly closings were above the zone, this was a strong bullish movement and bullish indication that the S&P 500 is going to enter into the 7,506x with some chances of the 757x. Then why the 7,200 range? Because first, the chip stocks, the Nvidia and other chip stocks have already gained around 10% from here, from this the bottom. Secondly, there are some news that the Middle East tensions are escalating. So if that escalation realizes by the time the stock market opens on Monday, in that case, we will see a downward pressure in the entire US stock market. And if the trend line breakout fails, in that case, S&P 500 will have to come down and the maximum it can come down will be the 7,200 range. Now, how the S&P 500 is going to trade and is going to behave in the next week, what will be the bullish condition, what will the bearish condition, whether the trend line breakout will actually happen or not, and whether there will be a new all-time high or not, and what will the support and resistance levels, all of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of July 13th, means from July 13th, which is Monday, to July 18th, that will be Friday. Now guys, let me help you navigate through this, the S&P 500 weekly technical analysis. So I have divided it into 2 parts. The first part is the technical part. I will discuss the technical charts, the technical indicators and everything. And then I will tell you whether the market is, the entire US stock market is 100% absolute bullish and is in the long-term bullish trend, or if there are conditions for any short-term bearishness. Second part is the probable movement. In the probable movement section, I will tell you what are the conditions for the bullish and bearish movement, when exactly we are expecting it to fall, when we are expecting it to move up, what will be the support and resistance zones, levels, and other factors. And guys, it is recommended that you should watch both of these sections in order to understand what is expected to happen in the S&P 500 and in a manner to the entire US stock market in the next week, the week of July 13th. So guys, first I'm going to start with the technical section. Now guys, this is the technical section and I've divided it into 2 parts, in the weekly chart and the daily chart. So weekly chart is the long-term picture, the long-term trend. Daily chart is the short-term picture, the short-term trend. First, I am going to start with the weekly chart and then I will cover the daily chart. So this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. But guys, before I start, so far if you have not subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now this is the weekly candle of the S&P 500. It's a good bullish candle with a long tail in the bearish side. This is clearly indicating bullishness. Bullishness in a manner that on Monday, on July 13th, we are expecting a gap up open or irrespective of any open and initial or intraday bullish movement. Yes, if the situation in the Middle East escalates, okay, or if it deteriorates, in that case, we may see a gap down open, but still, because of this closing, there will be an initial or intraday bullish movement on Monday, and this will then, and the same will be seen on the on like Tuesday, Wednesday, etc. Now, this is the last weekly candle of the Dow Jones. So, the last weekly candle of the Dow Jones is bearish, and it's a bearish spindle. Now, this is the problem, the bearish spindle, because the bearish spindle indicates a reversal, a technical reversal. That is the problem. However, this candle is or was responsible for an all-time high level of the Dow Jones, that was 53,289. This candle is not indicating a gap down. Rather, this candle is simply indicating an initial or intraday bearishness on Monday. Okay, no bullishness, no and also no heavy bearishness, but just an initial or intraday bearishness on Monday. And yes, one more thing, because of the formation of this, the technical bearish candles, the technical bearish spindle, if the situation does not improve in the Dow Jones by Wednesday, in that case, the Dow Jones will have to follow the technicals of the candle and will have to give up, will have to come down. So now it's clear through these candles that the weekly candle of the S&P 500 is indicating a gap up or an initial or intraday bullish movement, whereas a weekly candle of the Dow Jones is indicating an initial or intraday bearish movement on Monday. Now let's analyze the technical indicators on the weekly chart to see whether we are expecting a bullish move or the bearish move. Well, through the technicals, the S&P 500 is bullish through the moving averages, Ichimoku cloud and the Bollinger Bands. And the S&P 500 on the weekly chart is bullish through the MACD. MACD is still holding, right? And the S&P 500 is bearish through the stochastic RSI on the weekly chart. And as of now, it is neither overbought nor saturated, okay, or nothing like that. But yes, if there comes some good bullish movement, then in the next week itself, it will hit the saturation. And that saturation will be on the weekly chart. So in this manner, the S&P 500 on the weekly chart is now 80% bullish. What does this 80% bullishness means? This means that the S&P 500 is in the long-term bullish trend. The long-term bullish trend is not for 1 or 2 weeks. It is for a month, 3 months, 6 months, 1 year. That kind of the long-term bullish trend. The Dow Jones. Now, the Dow Jones is also bullish through the Bollinger Bands, through the Ichimoku cloud, through the moving averages on the weekly chart. And the Dow Jones is also bullish through the MACD on the weekly chart and is, yes, marginally bearish through the stochastic RSI, but it is still holding above 90. So it will be considered as bullish. The Dow Jones is in the overbought condition and is very, very near to the saturation. This means that if there comes any good bullish movement, and not just the good bullish movement, if there comes even a normal bullish movement in the Dow Jones, then it will remain in the overbought condition. But a good bullish movement in the Dow Jones would simply trigger the saturation. Then saturation and the overbought condition will again give a red weekly candle. So in this manner, the Dow Jones is 100% absolute bullish on the weekly chart, and the long-term trend is still bullish in the Dow Jones or through the Dow Jones to the entire US stock market. Now, what does the long-term bullish trend means? Does this mean that every week or every day there will be the bullishness? No, not exactly. Why not? Because see, long-term bullish trend is there, but there are the daily charts, there are the lower level charts, and the daily and the lower level charts, they change every day. This is why sometimes we see green candle, sometimes we see red candle, and then it creates automatically the technical conditions like the trend line also, and that triggers the fall. Or sometimes when the movement is bearish, there is a supportive trend line, then that triggers the bullishness or heavy bullishness. This means that even though the S&P 500 and the Dow Jones are the S&P 500 is 80% bullish on the weekly chart and the Dow Jones is 100% bullishness, 100% bullish on the weekly chart, this still does not mean that there will be a short-term bullish movement in the entire US stock market. This means that yes, no matter what, the market will be able to sustain. And yes, there is one more condition. If you look into this, the pattern, the holding pattern of the S&P 500 here, this is the consolidation in the S&P 500 on the weekly chart, and the breakout. The first of all, the breakout will happen on the daily chart. Okay, then secondly, the breakout will happen on the weekly chart, and once the S&P 500 breaches the all-time high level, that is 7620.90, then in that case there will be a confirmed the bullish movement, and then the S&P 500 most likely, not absolutely, but most likely will come out of the consolidation phase, and then only it can move towards the 7,700 or even to the 7,800. But remember, all of this is conditional. Why? Because the S&P 500 and the entire US stock market gained heavily and gained so much that even small economic factors will weigh heavily on the entire stock market, because this heavy bullish movement, the long-term bullish movement in the entire US stock market was based on the speculation that the war will be over and everything will fall back to the normal, and the job growth and everything. But the most important part is the interest rates through the Feds. So only when everything aligns and everything is back to normal, then only we will see the sustainable bullish movement in the S&P 500 towards 7,700, 7,800, or even in the best case scenario to the 8,000 level. Now, how soon we can see the movement, the breakout, and how soon we can expect the 7,700 to happen, if there are any chances of this to happen, all of this will now be clear through the daily charts. So let's move on to the daily charts. Now guys, we are here, and this is the daily chart of the S&P 500. Daily chart means one candle represents one day, not 1 week or 1 hour. So now let's discuss the candle. If you notice, it's a good bullish candle, just like what we have seen on the weekly chart. And this candle is also indicating a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday, right? But again, we will not rule out any like if during the weekend, if there comes if the situation deteriorates in the Middle East, then that will be an external factor. Otherwise, technically a gap up open, or irrespective of any open and initial or intraday bullish movement in the S&P 500. Now comes the Dow Jones. This is the last daily candle of the Dow Jones. Now, if you notice the wick of the candle, then you will see it's a very long wick, and finally the Dow Jones manages to close above its open price. This is a bullish indication. This candle is not indicating a gap up open, but is indicating an initial or intraday bullish movement on Monday, right? Now, considering the weekly chart and the daily chart, these are candles. What we can see here is that only the weekly chart of the Dow Jones is indicating an initial or intraday bearish movement. Otherwise, the weekly chart of the S&P 500, the daily chart of the S&P 500, the daily chart of the Dow Jones, all are indicating either a gap up open or an initial or intraday bullish movement. This means that technically now the S&P 500 and the entire market should get a gap up open or an initial or intraday bullish movement, even if for some reason there comes a gap down open. And if the situation deteriorates heavily during the weekend, there comes a gap down open in the open equal to high condition. Okay, in that case, intraday there will be an initial or intraday there will be there's a bullish movement intraday. Then on Tuesday, the next day, there will be the recovery. Why? Because of the same condition, right? Clear? Now let's analyze the technical indicators of the S&P 500 and the Dow Jones to see a clear picture, okay, whether there will be a short-term bullish movement or not. But guys, before that, so far if you have liked this video, then please hit like to appreciate, and please hit the hype button on YouTube. Now, technically, the S&P 500 is bullish through the Bollinger Bands, Ichimoku Cloud, and the moving averages on the daily chart. And also, now the S&P 500 has gained the bullishness through the MACD and the stochastic RSI. The MACD was very, very critical because if you notice on this day, Wednesday, 8th of July, when the S&P 500 was trading below the 744X, that time the S&P 500, this the MACD of the S&P 500 turned bearish. And there were chances that if the S&P 500 does not recover, and technically it was not allowed to recover beyond the 744x level, okay, but because of heavy bullish movement in the chip stocks, Nvidia and others, we have seen that because of that sharp bullish movement or manipulation, the S&P 500 came out of this condition and the MACD sustained bullish. Because if the MACD would have turned bearish on Wednesday, in that case this bullish movement would not have been there, rather there would have been the fall, right? So for now, the S&P 500 is bullish through the MACD on the daily chart and is also bullish through the stochastic RSI on the daily chart and has not hit the saturation or the overbought condition. So now the S&P 500 is 100% absolute bullish on the daily chart. What we have seen on the weekly chart, 80% bullishness. This means that the long term and the short term trends are absolute bullish on the daily and the weekly chart. Now this is the daily chart of the Dow Jones. Again, the Dow Jones is almost the same. Dow Jones is also bullish through the Bollinger Bands, moving averages, Ichimoku Cloud on the daily chart, and also, yeah, okay, no. There is this very big change in the Dow Jones on the daily chart. There is a clear bearish crossover through the MACD. Furthermore, to make the matter worse, the stochastic RSI of the Dow Jones is bearish, and to make the matter worse, the Dow Jones is in the overbought condition. This means that the Dow Jones is under pressure, under heavy pressure. See, this is the MACD, and we see the long trends for the bullishness and the bearishness. Okay, this is the long trend, long cycle. MACD gives this the linear movement. So the Dow Jones is going to play a very important role in the bearish side, means to trigger the bearishness, and in this manner the Dow Jones is 60% bullish. Okay, it is not bearish, it is 60% bullish, but there is a bearish momentum in the Dow Jones. This means that once again the bearish pressure will come through the Dow Jones. Last week the bearish pressure was there. Why? Because of the trend line and the overbought condition and the absolute saturation on the weekly chart and the trend line on the daily chart of the Dow Jones. That time it was there. This time the bearish pressure is because the MACD and the stochastic RSI of the Dow Jones are actually bearish. Furthermore, the S&P, the Dow Jones is overbought on the daily charts and is also overbought on the weekly chart. So it is last week the Dow Jones was not overbought on the daily chart. Remember this point, that the last week only the Dow Jones was overbought on the weekly charts, but not on the daily chart. This time it is overbought on the weekly as well as on the daily chart. All of this indicates that initially, even if the Dow Jones tries to move up, okay, and it gains green, and there comes the green candle or the bullish candle, in that case it can sustain like for 1 day, for 2 days maximum, okay, and it will become unstable and it will have to come down. The Dow Jones will have to come down, and when the Dow Jones comes into the pressure, then the S&P 500 will automatically come under the pressure. But that pressure may not. For example, if Dow Jones is giving a bearish movement, okay, or the red color candle, then the S&P 500 may not give a bearish movement, but the S&P 500 will give a limited bullish movement. The S&P 500 will move up. Intraday there will be heavy fall and will close as little green or the red. That is actually the pressure on the S&P 500 through the Dow Jones. And this is exactly what I mentioned here on Monday itself, that there is the zone in the bull side, trend line zone, and this zone is created by the trend line with my calculated level, and also the trend line in the Dow Jones. Because these two factors were there at the same time, this means that the stock market will fail. Now, how soon we can expect this failure in the Dow Jones or in the S&P 500, or if it is allowed to move up, then what condition will help the S&P 500 and even the Dow Jones to sustain, even though there is the heavy bearish pressure? There is just one special condition that will help the S&P 500 and the Dow Jones to sustain bullish even though there is the pressure. What will be the support and resistance levels? All of that now I will discuss in the next part, that is the probable movement section. But guys, before I discuss the probable movement section, I want to share this information with you that if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, and also up to 100 opportunities in the premium stocks and the ETFs of the US stock market, and also the midweek update video technical analysis, then you can join my Patreon community. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday, as well as opportunities in the premium stocks and also the midweek update video technical analysis. So guys, if you also want to get all of these, then you can join my Patreon community, and once again the links are in the description of the video and also in the comment section. Now guys, this is the second part of the agenda, the probable movement. And here I will tell you that how the S&P 500, Dow Jones and the entire US stock market is expected to behave and is expected to move for the week of July 13th, means from July 13th, which is Monday, to July 18th, that will be Friday. So now first thing first, the next week, now there will be events in the next week. The very first event is on Tuesday. The inflation data will be released. The CPI data will be released on Tuesday, and on the same day the banks like JP Morgan, Citigroup and the banks will post the earnings. So there will be heavy volatility, but these are because the banks are the primary constituents to the Dow Jones, not to the S&P 500. So S&P 500 will be influenced by the inflation data, and now the Wall Street is expecting a lower than expected, a lower reading from the previous reading. So if there comes any change in that reading, means if the inflation sticks to the same level, if the inflation number is not less than the previous reading or is higher, in that case that will be a negative factor to the entire US stock market, and then only banks can help, but the banks will help the Dow Jones. Okay, and when the Dow Jones sustains or it moves up, then the S&P 500 will be able to hold and sustain but will not be able to move up. Then comes Thursday. The UNH, etc., they will release the earnings, but again the UNH, the United Health Group Corporation, this is not a primary constituent to the S&P 500 or the Nasdaq. This is primary constituent or the top 3-4 constituents of the Dow Jones. So this means that the next week will be heavily volatile. Now, how that volatility is going to impact the movement of the stock market? So for that, you need to understand that the S&P 500 is now coming into the bullish breakout condition. Why? Because there were these the trend lines and the heavy zones. This is why we have seen a failure, then again a struggle, then failure, but then because of the chip stocks, the S&P 500 managed to clear the trend line zones. Okay, and this is now creating a trend line breakout condition. Now we need at least 2 consecutive daily closings above the trend line. Now if you notice, the trend line here in the S&P 500 is in the 753x, whereas my level is in the 754x. So once again we have come back to the 753x 4x zone created by the trend line and my calculated level. But this time it is different. Why it is different? Because this time there is already a daily closing above that trend line and is coming into the trend line breakout condition. So as per the rule, the stock or the index which is coming into the trend line breakout condition, it must retest the zone, the trend line zone, and then must sustain and must close above. This is the daily closing. It must close above the trend line, and then only it will be in a condition to follow the rules of the trend line breakout. Trend line breakout means that now it doesn't matter what is happening in the economy. If the companies are posting the bad earnings, or if there is the Middle East situation is not good, or then this thing doesn't matter. Then the trend line breakout condition will supersede, will override all of these factors. and then it will give a push. This trend line breakout push is what is needed to breach and to break the all-time high of the S&P 500. That was 7620.90, and my calculated level was in the 762x. So when the S&P 500 made an all-time high, then I have clearly mentioned that no matter what, it won't be able to clear, and this is from where we are expecting a short-term reversal. And that there will be the all-time high will be most likely confined within the 762x with very little chances into the 763x. Anyways, so this means that a trendline breakout condition we are talking about, and this must be fulfilled. This must be seen on Monday. Okay, and if there comes some bad news in through the Middle East, okay, and if the Dow Jones is coming into the pressure, Dow Jones is unable to move up, then by default, even though there will be the trend line breakout condition, the bullish breakout condition in the S&P 500, but the Dow Jones will still put pressure on the S&P 500, and in that case we will not be able to see a strong bullish movement in the S&P 500 and in the entire stock market. Rather, we will see a limited bullish movement, and that the S&P 500 is again and again is struggling to sustain at the trend line. And now there is one more bullish condition, that the S&P 500, see, the S&P 500 on Friday, it closed at 7575.39. Okay, this was the closing of the S&P 500 on Friday, but the previous all-time high was 7577.92. More bullishness or heavy bullishness or the sustainable bullish movement is not allowed until and unless the S&P 500 gives one clear closing above the 7577.92. Only when there comes one clear closing above the 7577.92, then only there will be the bullish movement, and then only there will be the chances, very heavy chances, that S&P 500 may try for the all-time high, that was 7620.90. But even after giving a closing above the 7577.92, which is the high of the candle, the S&P 500 will have to give one daily closing or continuous hourly closing above the 7600 psychological mark, so that S&P 500 comes into a strong bullish condition through a strong bullish momentum to breach and to move above the all-time high level. And once the S&P 500 makes a new all-time high, then by default there will be the bullish momentum and the bullish sentiments, and the last thing the S&P 500 will have to do is to give a closing above the previous all-time high, that was 7620.90, one daily closing above the 7620.90, so that S&P 500 can be considered, or it will be considered that it is now ready for the 7700. So now on paper or through the charts, it looks like very easy. That S&P 500 is at 7575.39, and it is how much? It is merely like 0.6%. It looks very much achievable, but once again we must not forget that there are many factors, and many a times the S&P 500 has failed. Just like you can consider just this example. Okay, that S&P 500, there was heavy failure, heavy recovery, but the S&P 500 failed to move up, and then there was failure, and since then, this was when? This was 15th of June, and now this will be like around 15th of July, just 1 month. It took 1 month just to cover like 0.5%, right? That is why in the stock market, nothing is obvious, nothing is confirmed, nothing is guaranteed. Right, this is why it looks like 0.6% gap, but this 0.6% will create means there are many hurdles, okay, before the S&P 500 can actually make a new all-time high level. Furthermore, to make the matter worse, the Dow Jones is already there, putting the downward pressure, putting the bearish pressure on the S&P 500. Now, question is, what happens if the S&P 500 fails to come into the bullish breakout condition through the trend line, and the S&P 500, or if it has moved up but is failing to move into the 7600 range, or fail to breach the current all-time high level, then what will happen in all of these cases? In all of these cases, there will be the bearish movement, there will be the bearish pressure, but how much fall will be there? That fall will actually depend from where the S&P 500 is getting the rejection. For example, the S&P 500 moves up, and in the best case scenario, the S&P 500 has breached. There is actual breach of the 7,600, but it failed to close above the 7,600, 7620.90, which was the previous all-time high. In that case, the fall will remain limited. Whatever the fall will be there, that fall will remain limited to the trend lines. Okay, no matter what, the fall will remain limited until and unless the Dow Jones has come into a very heavy pressure, or if there is some economic factor or something from the Middle East, the fall will remain limited. Means the fall will be like 0.6% only, and the fall will not be heavy. And if the S&P 500 is failing or has failed from the 7,600, means it has not breached, means okay, so let's say the S&P 500 has breached the 7,600 but has failed to give a closing above the 7,600. In that case, there will be the fall. The fall will be to the second, this is a trend line, but up to the 7,500, and will remain within the 7,500 range, because now there is a heavy support level and the heavy support zones through the trend lines and through the calculated levels. But yes, the important point is that even from the all-time high, or from the 7,600, or from the 759x, the failure, as long as the failure is contained and all of the closings are above the trend line, the S&P 500 will remain in the trend line breakout condition, the bullish breakout, because this is happening in the bullish side. So this is the bullish breakout condition. This means that even if there comes a fall, but is in the trend line breakout condition, bullish breakout condition, we can see sharp recovery in the entire stock market. But the situation will change. Okay, means other than these two, when it fails from some other level, then the situation will change. But guys, before that, so far, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and also the opportunities, up to 100 opportunities in the premium stocks, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, please don't forget to hit the hype button on YouTube. Now, the real bearish factors. So the real bearish factor is the 754x level. Okay, but yes, sorry, before that, 756x level. Okay, and yes, when the S&P 500 moves up or when it comes down, then because the closing was at 7,575.39 on Friday. So when it comes down, it will find immediate support at 756x. But because 756x level was disrespected on Friday 10th of July, this means that it will lose the 756x level, will come down to get the support at the 754x and the 753x. What is 753x? The trend line. Okay, so 753x and 4x, these are creating heavy support to the S&P 500. Now, once there comes a daily closing or the continuous hourly closings below the 756x level, this means S&P 500 is weak. Okay, then it doesn't matter whether that weakness is coming from the Dow Jones or not. In that case, the S&P 500 will be weak and will remain weak. But still, the situation will remain under control as long as all hourly closings are above the 754x level. Now, the situation will start to change when the S&P 500 starts to give continuous hourly closings below the 754x level, because that will then push the S&P 500 down, and heavily down, in a manner that these are trend lines. Only the trend lines will be able to save the S&P 500, and the lower level trend line will be the last. Otherwise, there is nothing. Then the last comes the 7,500 psychological mark. Okay, because in that case, there will be a confirmed failure at the 754x level, and then a failure at the trend line. Then there is nothing to help. Okay, but still, the situation will not turn worse. Okay, the situation will remain under control and will not turn worse as long as all hourly closings, all daily closings are above the 7,500 level, right? Sorry, the 7,500 is not a level, it is a psychological mark. So as long as the S&P 500 is holding, sustaining and closing above the 7,500, even if there are heavy red candles, then also that will be considered as a bullish sustainable movement. And in that case, the S&P 500 will remain in a recovery mode. Means the S&P 500 can recover. It will remain in the recovery mode, right? But only when the S&P 500 loses the 7,500, then this will confirm a few things. Number one, the all-time high is not going to work or is not going to form, okay, until and unless there comes the the second last week or the last week of the July, when the Apple, Microsoft, they will release the earnings, and only when their earnings are much better, okay, or exceptional, then only there will be some chances. Otherwise, the all-time high level is gone. Number two, the bullish breakout has failed. The trendline breakout has failed. Okay, this will create a problem when the S&P 500 try to regain the try to get this bullish breakout through these the trend lines. Okay, it will struggle and it will fail. Number three, that the S&P 500 is weak and will remain weak and will easily move into the 7,400 range and also in the 7,300 range. Okay, with some possibility of the 7,200 range, but the 7,200 will be the worst case scenario. It will be the worst case scenario because why? Because now, see, why the 7,200 is the worst case scenario and not the 7,100 or the 7,000 the 7,000 range? Because we are in the earning season. Even though the tech indices have not released the earnings, but still the Dow Jones, the companies, okay, the big companies or the big constituents of the Dow Jones are going to release the earnings. Okay, so even though the Dow Jones technically it is heavy and should come down, but still it will remain in a condition. But still the Dow Jones will remain in a condition to sustain and not to give up heavily. Just the normal bearish candles will still work. That is why I am saying that now we are in the earnings season, and because of the earnings season, market has absolute reasons to sustain and can supersede and override all of these, the geopolitical and the other factors. Okay, and also the data. But technically, what we know that as long as the 7,500 psychological mark is breached, there will not be any problem, and the S&P 500 will remain within the 7,500 range and will remain recoverable and will remain sustainable, and there will be some chances for the new all-time high to happen. Means like it may happen in the last week or so, but still there will be the chances. Okay, once the 7,500 is gone, then the only support factor is the 7,404x level. Okay, so let me clear the screen. So once the 7,500 psychological mark is gone, then the only support is the 7,404x. That's it. And once the 7,404x, yes, there is one more level between 7,500 and the 7,404x, that is, and that actually creates a zone in the 7,406x and 7x. It creates a very small zone. Okay, so 7,404x. Once the 7,404x this is gone, then there is nothing until the 7,306x level. This is why when the S&P 500 was coming down on 8th of July, that was Wednesday, there were conditions that yes, it will hold in the 742x. It will stuck in the 7,402x. And exactly the same I mentioned here, that the fall will stuck around 742x level. And because there was some manipulation in the tech stocks on that day, that is why there was heavy recovery, and the S&P 500 has recovered the 7,404x and closed above the 7,404x. Otherwise, it was not in a condition to sustain at all. It was supposed to close at or around or even below the 7,404x, and to create this opportunity or to create room in the 7,300, then on Thursday the movement would have been into the 7,300 range, right? So once the 7,404x is gone, then we have the 7,306x. This is the known heavy support, but because the S&P 500 came down on 26th of June, S&P 500 came down and made a low at 7294. This means that 736x, if the situation deteriorates as I mentioned, okay, discussed, okay, what will be that condition, and the S&P 500 has come down to the 736x. This means that the 7202x range is there to the 729x, and that will be the this will be the worst case scenario. Even if the 7294, the low of this candle, is breached, then also it will remain within the 7200 range. So the movement on Monday, especially the first half, will clear almost this the situation or the means for the entire week. And if there will be any confusion, then that will be cleared on Tuesday when the inflation data will be released, the CPI data, and the banks will post the earnings. And then whatever movement or momentum or the direction the stock market has gained by Tuesday morning, okay, whatever the direction, movement or momentum the S&P 500 and the Dow Jones have gained, then most likely that will be followed for the rest of the week. And there will be some exceptions. Those exceptions will be through the technicals, because on the weekly and the daily chart, the Dow Jones is in the overbought condition. And in case of the S&P 500, it is very, very near. Means if there comes two consecutive daily closings, green closings, like Monday and Tuesday, in that case S&P 500 will also hit the overbought condition and the saturation or the absolute saturation. So, well, whatever will happen, that I will mention in these the post to my Patreon community members. And guys, if you have not yet joined my Patreon community, then you can join my Patreon community, and the link to that I mentioned in the comment section and also in the description. So guys, once again, hit like if you have liked this video to appreciate, and hit the hype button on YouTube to show your support. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon.